Precious metals are getting more precious. But why? Gold prices have been soaring to record highs. Take a look at how those prices have soared. After jumping above $1,500 an ounce for the first time yesterday, gold is still trading at $1,503 today. Silver has surged, copper rose. Meanwhile, the U.S. dollar is falling to multi-year lows. You can see that red line is the dollar that just kind of flatlines and goes down. So is this trend, is this all about the decline in the U.S. greenback, the global reserve currency? Well, joining us now to talk about that, to answer that question, is Scott Carter. He's Executive Vice President of Goldline. Mr. Carter, I want to thank you for joining me. Now, so much is going on in the markets these days, so much volatility, so many different factors. So please break it down for us. What do you think is going on with gold right now? How much of a factor is concern about the U.S. dollar?
Oh, well, absolutely, it's a concern about the dollar, Lauren, and thanks for having me, by the way.
You got it.
Clearly, you have inflation concerns, you have a decline of the U.S. dollar, and that erodes the buying power of the average consumer. So gold is often referred to as the canary in the gold mine, and it's certainly screaming right now that fiat currencies around the world are declining in value, and commodities, and gold and silver being a commodity and viewed as a currency, are reaping the rewards of that.
Okay, fiat currency, so essentially the dollar, which is not backed by the gold standard or by anything else. The worth is whatever is given to it by the market and by different financial policies. So how much of a role does the United States monetary policy play, the Federal Reserve's quantitative easing, and what's going on with the dollar right now?
It plays a significant concern. Obviously, the idea of keeping interest rates low, the idea of throwing cheap money into the economy has an impact on all commodities. But it also, as a currency, plays a role in the buying power and ultimately fuels inflation. So when you see gold and silver, which functions not only as a commodity but as a currency, going up to the extent that it is, I think it's a wake-up call to investors in the world that they have to diversify their portfolio to preserve their buying power. And that's why you see such a run-up in gold and silver.
What should it be a wake-up call for in terms of policymakers in the United States? Do you think that they should be connecting that their policies are creating this?
Absolutely. I think that when you see the market adjusting to our debt issues, not only in Europe with the ECB, but in the U.S. with our deficit spending and our long-term debt and unfunded liabilities, the general wisdom is that we will continue to print money to pay these future bills. So monetizing that debt, basically making current dollars worth less in the future because of that process, only drives up commodities. So I think it is a wake-up call to politicians. The S&P gave them a wake-up call by downgrading the rating, if you will, or the indication to negative. All of these factors play a role in why you see many things happening in the market, not only the equity markets, but certainly in the gold and silver market as well.
I want to know what you think the impact of that S&P negative outlook is, because a lot of the analysis has been that this was a political move, less about fundamentals and more about making a statement over Washington's inability to deal with the deficit. Do you agree that it was political, or do you think that fundamentally people should look at this in terms of what the S&P thinks of the United States debt situation and fundamentals?
I don't believe it was political. I think when you evaluate the United States deficit spending and its debt in relation to other countries, whether it's Spain or Portugal or Ireland and all the other countries that have had problems, you could make a strong argument that the U.S. is in a difficult financial position right now. The plan right now is to have deficit spending for the next decade. And therefore, our debt at $14 trillion is estimated at the moment to go to $20 trillion. So I think the S&P has accelerated the conversation to politicians, to leaders, to say you have to get your fiscal house in order, or your viability in being able to pay your debts without increasing interest rates is in jeopardy. So not political. I think it was fundamental. I think it was surprising, but I think it was an important step.
What does this mean for the U.S. dollar as the reserve currency? What we're seeing have happened with the dollar's decline and with the rise in not just gold, but gold, silver, copper, a number of precious metals?
Well, I think you hear the drumbeat from the world the World Bank, Bob Zoellick. I think you hear the IMF and other sovereign nations discussing whether the U.S. dollar should be the sole reserve currency. In fact, many conversations are around, should there be a basket of currency? And I think that when you look at how oil is performing, which has to be settled in dollars, when you look at the treasuries that are on the books of our partners like China and Japan, there's a very real concern that if our monetary policy is to lessen the value of those dollars, then should we have a reserve currency that is more stable, maybe a basket of currencies that includes not only paper currencies, fiat currencies like the yen or the euro, but maybe hard assets like a modified gold or silver standard that's incorporated into that basket.
But still 61% of reserves are dollars, U.S. dollars. And really when you talk to people, there's a political will for a few countries, developing countries, that have really taken a hit as a result of U.S. monetary policy with overheating in their economies. But aside from that, I mean, is there really any practical way for the U.S. dollar to not be the reserve currency, or for there to be a basket of currencies, or SDS as has been proposed through the IMF? Do you really see anything changing?
Well, I think that if you look historically, you've seen reserve currencies change. The British pound was the coin of the realm for hundreds of years, and then the U.S. dollar became the reserve currency. I think the U.S. has a responsibility to protect the value of the dollar for those individuals that are buying the treasuries and the bonds. And to that extent, if we get our house in order and we function not only as the currency for the U.S. economy, but also as the global reserve currency, then you're right, it's a limited chance of change. But if we continue on this path, where other countries are being severely impacted by the reserve currency, then I think you're going to see pressure mount in the world order, whether it's the G8 or the G20, to somehow create some balance in a reserve currency that is a basket or just something that is more stable.
In the meanwhile, are we going to see gold continue to increase and the dollar continue to go down? Is this going to continue on this trajectory?
Well, I think the U.S. right now has a stated policy of a weak dollar policy. I think the incentive to have a global economy where our goods that are made in the U.S. are worth or are less expensive in the world is a stated policy to try to create demand, to try to create GDP growth. So as long as the U.S. dollar will be weakened and interest rates will remain low, I think you're going to see an inverse relationship or a positive relationship to the price of gold and silver. And many analysts are predicting that we'll continue to see upward pressure in the price of gold and silver as a result of that policy.
So you predict it's going to keep going up?
Well, obviously, it's an asset class. I don't think anything goes straight up, and it should be viewed as diversification as a hedge. But clearly, it has a chance of going up.
Okay, that was Scott Carter, Executive VP of Goldline. Thanks so much.